Welcome everybody. Great to see you guys. Definitely, I don't know if we want to call this a special edition or simply podcast number 12, but there's definitely a lot going on right there. Hopefully, we can get right into it. Great to see you guys. I'm sure you're watching the news, and man, the information that we're getting is literally changing by the minute.
Yep.
You're going back from some of the things that were taking place on Wednesday, right? And obviously, the first thing that we're gonna go as part of this conversation that we're gonna go into is this whole conversation about the banks that are failing, and it's no longer the bank that fell, is the banks that are failing right now.
Yep.
Which it's really a scary conversation right now. And then we're going into some of the things, border crisis, some of the stuff that's going on in New York with Madison Square Garden. I don't know if you, we're gonna circle back to this, but obviously the main reason for this conversation today is to try to get you as soon as possible an update with what's taking place with the banks. A lot of information coming from different places, different directions. I want to get your feedback a little bit. Obviously, what started this conversation was Silicon Valley Bank, right? SVB is what triggered a lot of this conversation.
Mm-hmm.
Like Wednesday, everybody was talking about, hey, there's something brewing, something wrong. Already, people taking action, moving money in and out. By Friday, FDIC had taken over the bank, and then we went into what is one of the questions that we are going to address right now. FDIC capability to actually protect the money that was in there. I'm going to tell you if there are things that seem so inadequate and old-fashioned, not properly updated, not addressing cost of inflation, not addressing income levels, not addressing asset levels to many of the companies that are playing, especially in banks like this, right? Mm-hmm. Over the weekend, different news came out. Obviously, everybody stepped in. Treasury, Federal Reserve, just about every regulating body of the banking industry also has stepped in. But what do you know about what's taking place here? I want to get your feedback a little bit about some of the stuff that's going on here and see if we can provide a simple, basic perspective for a lot of people right now that you're hearing banks collapsing. That can send a lot of people into a significant amount of panic right now.
True. Well, for me, honestly, I'm not surprised. I'm not surprised at all. People like Patrick Bet-David, Robert Kiyosaki, a lot of individuals have been saying things like this was saying this was gonna happen from almost a year ago. But it's almost like when you hear, somebody in your family is sick, they're gonna die. No matter how much how prepared you are for it, once it happens, it's like, oh my gosh, I can't believe that happened. So I think a lot of people are going to be shocked, and the only question now is how bad is it going to be? Because I don't think this is going to be the last
it's just the beginning.
Exactly. So, but I'm actually not surprised. I'm actually not surprised at all. Yeah.
So when did you start to pay attention to?
Friday there was a little bit of a heads up, and the fact that there was so much ticking happening over the weekend, I'm like, what is happening? All of these guys were working on Sunday, which we work on Sunday, but it's very different to see.
Correct.
The Powells, the Yellings, all of those guys saying stuff on Sunday. So that was actually pretty interesting. For me, it's not a surprise. But whenever you raise interest rates, you're tightening the ability for people to borrow. Interest rates are higher, which means, if my understanding is correctly, these guys are paying a higher interest on certain loans and stuff that they're even putting out and taking out. They get to be risky with their money. So, and in addition to that, they say, hey, this money may or may not be available. You guys, this bank may or may not be doing things the right way. Then everybody rushes to get their money out, and that's when everything collapses. So, what people are saying is that over 90%, I've heard 93, 97, I don't know what it is, but over 90% of the deposits were not even FDIC insured because they had more than $250,000 in there. So there's a couple things happening there. FDIC, maybe it needs to be raised, the level, because $250,000 for a business, for a regular average Joe, is not a it can still be a lot of money to a certain extent. But for a business to run payroll like the Etsy's, the Roku's, all of those big companies that were backed by, that were putting their money in here, it's not a lot of money. So I believe from the get-go that something has to be adjusted there.
So how about we address a little bit what caused this whole situation, right? Obviously, as you
Higher
know,
interest rate.
well, but it starts with the opposite, right? It starts with the opposite, which is
Free
we
money.
had low interest rate
For a
for
really long
so long. We were at zero for so many years, easy access to money. At some point, banks became, again, very flexible when it comes to lending and putting money out there. Tons of lines of credit, a lot of startups. As a matter of fact, this business, one of the things that are being criticized about the bank specifically is that their business model caters to
Silicon Valley.
and obviously, what do you get there?
Yeah,
Right.
startups.
A lot of startups, right? And so, and by the way, that's as American as apple pie, right?
Yeah.
And so, you want to have a mechanism to support these things, but when your business, your investment strategy is so committed to one single market,
Yep.
something goes wrong with that market.
Correct.
Obviously, and we've seen that in the past when it's connected to the housing industry or the auto industry. One single market, if that's what most of the stuff. So then, obviously, besides COVID and a lot of the money, a lot of the bailouts, whether people want to call them that or not, but that's what they are. Every time the government is pouring money into the system, is to bail the system out. So that what are they trying to avoid? Precisely what's happening right now, right? They're trying to avoid a collapse. What we have concluded in many conversations is that you don't really get to avoid anything. All you're doing is you're just moving the ball down the court.
And you
right?
make it a snowball.
And by the way,
It's bigger and
shout
bigger.
out to my very good friend, Mr. Warren Buffett.
Who's ready to go shopping?
Yeah. So the snowball effect has had a lot of wisdom when it came out, and it definitely has a lot of wisdom today. I would love to be a little fly in the wall, listening to the conversation that he's having with his people right about this moment. What is he talking about? Guys, we got to be careful. Guys, get ready. We're going to go shopping. Guys, get ready. We're buying up just about everything
Yeah,
out there.
I think so.
Is he concerned about
He doesn't
any
do
of his
tech,
own
though.
capital? He doesn't do a lot of tech. He doesn't do. He's very specific about business models or companies that he's willing to invest. But at the end of the day, he also has the ability to recognize a good deal when he sees one.
Yeah.
Right? I mean,
Correct.
and make no mistake about it, there's going to be a lot of great deals that are going to come out of it. So news comes out. It feels like it's not stable enough. Couple of questionable things, including the CEO cashing out some of the stock. I believe over 30 mil, it was about 34
$30 million, yeah.
million dollars. Right, talking about you know what I mean, like internal
Poor Martha
access
Stewart.
to information. She's real. Martha Stewart is saying, wait a minute.
Yeah, something don't seem
It's like, I need somebody next to me in the bottle of 19
I wasn't
crimes.
even working for the bank.
Yeah.
This guy actually
Yeah,
works for the
it's
bank. How do you
jacked up.
handle these things?
Yeah.
And then when you see the average person talking about crony capitalism and things like that,
then
when they
this happens.
see stuff like that, that's what drives them crazy. You know what I mean? And it gives them every reason
Yeah.
to make that argument. So now, by Friday, FDIC has taken over the bank. And I mean, it's not pretty. This is like people that walk into the place, they lock doors, tell everybody get out. It's literally a hostile takeover. You don't touch anything, walk away from your facility. Just think about that.
Yeah.
It's like somebody walking into your
I
house
get
saying,
it.
"Stop cooking, let's go out." Somebody in the bathroom, "Let's go." I don't care. There's that kind of approach. It's aggressive. It's not subtle. It's meant to disrupt everything that's taking place over there. But at the same time, it's done for the single purpose of trying to send a signal out there. We got it. We are protecting.
Yeah.
The problem is, all right. So let's talk about what FDIC is actually insuring today. It's up to $250,000.
Right.
That was actually raised. What was it? 2-3 years ago, from 250 to from 150 to 250.
Okay.
Which was 100,000 to 250. Yeah, everybody was like, okay, we're going in the right direction. It's reflecting a little bit But you realize that when you're talking about the assets that were involved here, right?
90% of them were not.
What are we really trying to insure with those 250? Are we insuring the average person, depositor that is there, or are we also trying to do something for the small business owner?
Right.
Right?
Yeah.
$250,000 is not going to do anything.
For some companies, even they may be a smaller, medium-sized company, it doesn't cover payroll. And that was the biggest concern that people have. Like the reason why they didn't allow this thing to go belly up completely and they bailed out the depositors is because of that. Is because there was a lot of jobs and things that were going to be lost on that end.
Well, here's another issue too. Let's even say they're gonna take care of everybody, like 100% of your money, which I doubt. But
Well,
how
that
long
was
is
the
that
actual
process
announcement.
is gonna take?
For SVB, for
That's what I'm saying.
Silicon Valley
Let's say
Bank,
if I had $1 million in that bank, and they say, no, you're fine. Your $1 million is fine. We're gonna make sure you get it back.
it's available right now.
It's available now.
It is
Yeah,
available.
that's
So,
right.
so here's what Lorena was
I'm gonna
referring
go
to.
get it now.
What Lorena is referring to is that
Today.
over the
Don't do a
weekend,
bank run.
over the weekend they went from trying to sell off
Yeah.
the bank, right, and
Yeah.
and auction the bank. They were gonna sell it, they piece it out if need be. By the way, they're still trying to do that. They don't have a buyer for the European, specifically the UK market,
Yep.
right? Because they had a
That
president.
branch.
HSBC already stepped in to say that they're buying the assets over there. But nothing has happened here in the United States, which,
Sorry.
by the way,
Yeah, 'cause I have a question
it's a
about
little
that.
scary when you're saying, you mean no buyers whatsoever? Because I'm gonna tell you what that really means. If the for real money, and I'm not talking about Oprah's money. I'm talking about whoever is cutting her check.
Yeah.
That kind of money. Right now, what I'm gonna explain to you about what they have the ability to do. I'm gonna use even an example coming back from the mortgage default scenario that we have going on in 2008, so you can get an idea of what the possibility is going to be here when we're talking about assets and portfolios and stuff like that.
Can I go through it in like super layman's term, and then you
1000%.
can tell me if I'm right or wrong?
Go ahead.
Because here's the way that I saw this, and I wanted to ask you, what do you think about the UK automatically? Like that was like news was in, next day or the day after, UK branch was bought by HSBC.
Correct.
Okay, and D talks about HSBC all day. It's like our favorite bank in the whole wide world, right? So
I don't know why
because
it's
she
a-
remembers.
I don't know why it's a Chinese on
Besides the point, but she keeps on saying that. Wow, that's crazy that you say that. But here's the way that I look at it. It didn't happen in the U.S. Why? Because they're relying on what was the first thing. Biden came out and he says in the morning, first thing today, he says, "Don't worry about it. Your money in the bank is safe. No tax money is gonna come out of the." No taxpayer money is gonna come out to bail these guys out, and we're gonna fire management. So it's very reassuring. But the message that you're sending to everybody else, right, is mom and dad got you because you can get into as much trouble as you want, right? And mom and dad are the investors. They said we don't care about the investors. The investors are running the risk. That's what capitalism is. But that's not really what capitalism is, you know, because the government shouldn't be stepping in to take care of that. You know, we should have had, and that's my question. It's like mom and dad is the government. We should have had. Chase is not gonna jump in. Bank of America is not gonna jump in because they're gonna be like, why? The government is gonna come in and they're gonna figure it out. But in the UK, how are things so different that immediately a bank jumped in and they said, let me go ahead and acquire these assets?
Well, part of it is the fact that again, this is a bank that is absolutely owned by China. Is operating according to banking regulation with full autonomy, meaning it's not necessarily being influenced by the state per se, right? But when you think about, you know, do they want to acquire, you know, some very specific assets and they growing their presence, right, all throughout influence anywhere, they continue to do that. This is an easy way
It's
to
across the world.
Correct.
Yeah.
And then the question is, what did they purchase for how much? Right? So I'm going to give you an example, right? So maybe the reason why you don't find a good buyer for everything that's taking place here in the United States
Just
is
'cause
because
larger?
somebody's saying I'm not willing to pay for that price for it.
Mm-hmm.
An example, just to give you an idea, back in the 2008. Again, there's a meltdown with the subprime lenders. One back to back to back. There's 7, 8, 900 of them. They shut down in a single week. Right? Imagine 700 banks, like closing back. And again, a subprime lender it behaves in a different way than a traditional lender. Like these guys were operating SVB more in the investment side. Warren Buffett doesn't like investment bankers for that reason. You know what I mean? It's a lot more volatile as a banking model goes, but they do have depositors. They do have the average person that will go set up. A lot of the people that will work for a company. That's almost like a natural transition. You know what I mean? We're gonna handle payroll with this company, and you want your money to show up a little faster. You know what? Let me open up the account with whoever they bank you with.
Right.
You know what I mean? And so, just a natural way of doing things, but. Bank of America in 2008, 2009, when this is taking place, they literally almost became junk stock status. If you go below $5 on terms of,
Bank of America.
by the way, Bank of America is never trading like at 600, 700. At the best moment, they're like 49. I don't know if they ever broke $50, to be quite honest with you. But they're very stable. They stay there. You know what I mean? They're always, right now, I think they're down to 30. But they've been at 36 for God knows how many years. There's not a lot of excitement going on there. You know what I mean? But they went down to basically $5 and maybe under just a little bit for a couple of days. And here's the interesting choice that they make investment-wise. They went ahead and they purchased the assets. They purchased Countrywide. Countrywide was a subprime lender. They had about $52 billion in assets. And what Bank of America ended up paying for it was less than $3 billion. So it doesn't matter how much of a that portfolio is non-performing. You can be buying bad paper, and that's what it's referred to, right? You're going to go buy the paper, right? And so right now, what they're trying to what they're trying to sell is not the printer in the corner of the office. You know what I mean? They're trying to send all that paper that they have out there because there are real investments, and now somebody's got to go through what is performing and what is not, and how much am I willing to pay for that, and am I really looking for a significant deal to go buy it? Because you do have this bank right now it's $197 billion in deposits, but it was over $200 billion in assets. They had a net positive, except for the fact that what is the real issue? Liquidity, right? If you go to a bank right now, it's like it doesn't matter if you went yesterday with $100 million. If you go back tomorrow to say, you know what, I want my $100 billion right now. You're gonna have a.
What do you mean? It doesn't have like a little ribbon that says
no.
Lorena's
It's like
money?
everybody goes to sleep, and when they talking about this confidence in the banking system, they go to sleep thinking that two things, right? That the money's sitting in a gigantic vault somewhere. All the cash is there. That's not it. The second thing is that the challenge with FDIC, right? So what you see there is already somebody that made an aggressive move. They came to the conclusion that they were buying. I don't know what the offer is, right? Like I don't know exactly, and these things are still, and they just make the announcement. We make that, whether that's final or not. But what I know is that an entity like that should be making a very aggressive offer. Anybody that's going to buy any of the assets. But the thing is that, so we go into Sunday night. That what you're saying right now is like, all right, so FDIC is going to insure $250,000, but now what you have is, so what happened with the rest of the money? How can you not panic? And that is, guys, what triggered part of the scary situation in 2008, which is absolutely what's taking place right now. It's a high level of panic, right? By the way, rightfully so, right? This is the moment when you're saying, I don't trust the system. This whole, interest rate structuring, higher or lower, is more of an art than a science. You know what I mean? Because everybody kept saying, "Hey, you're going too fast. I know you're trying to just reduce the possibility of what's going to happen down the road. But you're moving too fast, and it's going to have an impact here. It's going to have an impact there. Say no, we got to do it. They slowed down a little bit. They started to move again, and this is one of the main reasons why a lot of the fact that it was done so fast, that it was not done with a real science. I mean, by the way, listen, guys, there's a lot of intelligent people that are behind these decisions.
Mm-hmm.
And they look at history, they look at scenarios. But I think that there's also, I think there was a real moment of, we have no choice. We're going to have to go through some of this pain.
Yeah.
But what is supposed to happen, Alexi, is if something is supposed to fail,
Mm-hmm.
Let it fail.
you have to let it fail.
Yeah.
And then the question is, who suffers?
Yep.
If I'm the guy that had a $3,000-$4,000 account in there, my money, FDIC
Yep.
was going to make the money available no matter what, starting today. If I'm a guy who was unfortunate, is a small business owner who was unlucky enough to be at $255,000 in there,
Mhm.
then they're going to insure a portion of my money, the other one I'm losing. If I'm a guy who's already $5-10 million,
Mhm.
I'm in real trouble.
Yeah.
For me, my concern when I see something like this is the snowball effect
Yeah.
for the business that starts shutting down
But
one after
isn't
the other.
this when because this is not the fault of the depositor. This is the bank,
Correct.
right? So it's like the depositor has. I'm talking like it's good companies like Roku, Etsy, there's Circle.
Correct.
Like there's a bunch of different companies that are like. Isn't this a great opportunity for like other guys, other banks to come in and say, hey, why don't you come do business with us? Like and go out at that route. I don't know if maybe acquire the whole bank, but like pick up a couple of people.
Yeah, but what do you want me to bring from my bank to you as a bank if I don't have access to my money? What am I bringing?
I get it, but this is where
That's
you.
what I was saying. Yeah.
So who should be the one paying the price? Should I
The
pay the
bank.
price?
No,
I
not the
went
depositor.
into an entity like my
Yeah,
whole
yeah,
life,
yeah,
like
yeah.
just like since I was a kid, my grandparents listen.
They've
The
been
bank, you
banking.
take the money to the bank,
yeah,
and
yeah,
everything, you know what I
yeah.
mean? Keep
Yep.
your savings.
Move your money to
Uh,
insurance, guys.
Anybody,
I promise you.
It's like, where do you go with the money, right? That money's got to go.
Yeah.
And then so you go and you said, okay, so I'm taking the money to the bank. The bank is failing.
Mm-hmm.
Where is my money? Do you understand what I'm saying, right?
Spent it.
I have
Yeah.
no issues with
Yeah.
the profitability
Yeah.
of the bank. I have no issue. But I didn't ask you to go invest my money.
Yeah.
I asked you to charge me a fee
Mm-hmm.
for you handling all the financial activities that I have to do through your entity, and I was okay with that.
Yeah.
You even told me that if I had a minimum dollar amount in my account, I don't have to pay for those fees. I don't have to worry about that.
Yeah.
But so I was willing to do that, and I was willing to have you charge me every time I send a wire transfer to somebody, every time I requested for an additional set. I understand that you got to run a profitable business
Mhm.
the same way that I'm trying to run a profitable business. But I didn't say go invest my money. I didn't even know that you were investing my money to begin with. You mean
Yeah.
the money that I borrowed to buy my house from you
Came
was
from me.
my money? Is that what you said?
Yes.
Do you understand
Yes,
a little bit
problem.
of
Yeah.
what we need to know with the cycle?
So then here's the problem
Mhm.
is one, like I said, I don't think they're gonna get their money. I don't care what anyone. I think if I
No,
have
sir.
$1 million,
No, thank
you're not getting your million out
You're-
today. You're not getting.
Good.
No, you're not
It's
getting
not-
it.
you're not getting
This
it.
is not the average
Yeah,
Joe.
yeah.
You're,
So-
you're behind on
Yeah.
the news.
Correct.
That's
Yeah.
official.
No,
already.
that's official. Yeah.
And it's already available for.
Biden already said.
What
that
I'm
every-
saying,
every-
no. If I, it's hard enough to try to get $10,000 out the bank.
Yeah.
You cannot just go and get your money. It doesn't matter what they say. They're not
No,
going to
I
just
mean,
give you
you're
access
not.
to it.
By the way, let's make sure that we understand what we're talking about here, right? It's not like I can show up with a tractor trailer right now, right? And just back it into
An 18-wheeler.
Okay, yeah. You know what I mean?
Okay.
And say, hey,
Get
bring
in.
me just
Correct,
bring
correct.
Bring
my
me the pallets.
like 20 pallets for me. Like, no, that's not what I'm saying. What I'm saying is that right now you have the ability, which the deal that she's proposing.
Mhm.
Hey, why don't you come with me, us,
Yeah.
Chase, right, who happens to be right now the largest bank
Yeah.
with assets with 300 in, I'm sorry, what is that, $3 trillion?
That's a lot of zeros.
in assets, right?
Yeah.
And they say, hey, why don't you, Bank of America is saying, why don't you come with us? Citibank, why don't you come with us? Well, what they are going to have the ability to do right now is to, again, move monies from one environment to another one, maybe even run a couple of payrolls, at least one more payroll cycle out of that structure, so that they can, because I don't care what
They
anybody
gotta
says.
find new housing.
What's going to happen is, where there is no confidence, regardless of how much money they pour into the bank so that you can get your money. And that's all they're saying is like, they trying to tell everybody, don't panic, we good, right? We're going to be okay. The problem is that so now you start moving the money to another entity, right? You have the worry. Again, it's not a question of cash, but it is a question of liquidity, right? Can I still do the electronic transfer that I was planning? Can I send the money for the merchants, the merchandise that I was that it was due as a payment somewhere in overseas, and it was due today? All of that is taking place.
Yeah.
That is happening.
So what I'm saying, I hear what you're saying. I'm saying I don't believe it. I think if everybody goes at the same time and tries to get access to their money, they're not going to get it.
That's called a bank run.
That's what I'm saying.
But that's what they're trying to prevent by saying, don't worry, your money's safe.
Dude, why would I not worry? If I just see that the bank that I'm banking with, I'm going to worry. I'm not going to.
I would love to tell you that was the biggest problem on the table, but that's not it. That's not it, because, okay, so there's a couple of things that we need to address right now. FDIC is definitely not adequate, definitely doesn't have the ability to handle the size of the losses that are going to be taking place right now.
Yeah.
The fact that it was only
They have for
250,000.
maybe one or two, maybe three banks to
Well,
back up.
Well, let me tell you where we are already,
'Cause
and that is my
We're
point.
backing $9 trillion over.
With how much money?
Like $1 trillion.
Yeah. So right now,
It's a big-
FDIC has the capability about 1.6%, if we use in percentages, to be able to explain their capability to handle everybody's losses if we all went into losses at the same time, which goes back to what you're expressing,
Right.
but that's not where we are at this very moment. I'm not saying that
Okay.
we can get there.
Okay,
I'm not
I
saying
got you,
that-
I got you.
I'm not saying that by
I think it's
tomorrow,
already there.
by tomorrow.
They just trying to keep
you know what I
everybody
mean?
calm. We're already there.
Listen, I don't know if it's gonna be a doomsday
Yeah.
zombie scenario, people burning tires. I don't know where. I don't know where it's gonna go.
Yeah.
But what I'm telling you right now is that, so that everything, the solution that was provided, that was taking place during Sunday, was to tell everybody here, we're starting tomorrow morning. Your money's available, and that goes for everybody in that bank. The problem is that by the time the night was ending, Signature Bank was also collapsing.
No, Sunday. That happened on Sunday.
That's what I'm saying. The
Oh,
night,
yeah.
Yeah, by the time the night was ending, Sunday night,
Correct.
Signature was already collapsed. There was already talks about First Republic, which by now is 70%
down.
almost down, right? Silvergate was already automatically part of the conversation because they were catering mostly, again, a very volatile single strategy, which was mostly connected to cryptocurrency, which we know how that movie is playing out right now.
Fantastic.
So here's the problem.
Yeah.
First of all, do we raise the minimum for FDIC? Right?
Yes.
What do you raise it to? Right now we went 250. We realized that 250 is not even what would be needed to cover a couple of payroll cycles for somebody. That doesn't mean that you're still going to have the capability to rescue a business. If your assets were $15 million, what do you raise it to?
I don't know. It should be a percentage of.
What's a reasonable percentage of your own money?
100%.
Okay.
Yeah. Because if not, then I'm gonna question like how I'm gonna move forward with my money with any bank. Because if I lose a significant portion of my money, or if it's just hard for me to get access to it, now I'm gonna think, all right. So what do I want to do moving forward? Do I, even if Chase says, "Oh, just come to us," I'm like, but wait a minute, I had a problem with SVB over here. Do I really want to just go to you? How do I know that it's not going to be the same situation?
Should you pay
know?
to protect it?
It depends on
Should
the
there
amount.
be a clause?
It
I mean,
depends on the
here,
amount.
yeah,
Depends on the
because
amount.
all right. So let's
Yeah.
hear from let's hear from two different perspectives. One is the individual, right? I think that the average person out there is 10, 20, 30, 40, $60,000. Not a lot of people are sitting on a quarter.
Mm-hmm.
Not a lot of people are sitting on $500,000. Not a lot of people, you know what I mean? Like just sitting in the bank. And don't get me wrong, we are dealing with clients that whose, CD account was
80, 100,
80,
150,000.
150, 180. We have a few people, 600, 750. We know that at an individual level, right, there's only so much you can go before you start charging. But then what do you do when a business is doing everything that they can to be disciplined, to run their business to the best of their ability? All the employees are happy.
They're liquid.
They know how to pay.
Yeah.
The CEO is not somewhere in Lake Tahoe doing the private jet with 20 other people. They're not wasting a penny. They just want to be very disciplined. They're trying to build a good business. And due to the lack of real responsible management from the bank, your business is now at risk.
Yep.
So who becomes responsible for it? Should
The bank.
but the bank is done.
They're gone.
The bank is done.
Don't they have insurance? They have to have
But
insurance.
that's my
Yeah.
point is
It's like-
there should be a cost of insurance to somebody, and I don't believe
There should be
that
the
that should be to the business. I'm too
Yeah.
guys. I'm too pro business to just turn around and say you're 100%. What is the percentage of your money that should be protected? 100%.
Yeah.
Well, there's going to be a cost to that.
I get it.
Somebody has to insure that money. Now, who should be the one eating the cost?
So here's how I would look at it. If I have to pay any amount, you're not allowed to touch my money. I want a big vault that's gonna be holding my money.
Where are my pallets?
Yeah, it's gonna be holding my money.
I want to
Right? Yeah.
Those-
Correct.
Every
Because-
time Alexis gonna
I
come
get
in
it.
and
The bank
count the
wants to
money.
make money. They want to make money.
I wanna go see it before I go to bed.
Correct. So if the bank wants to make money
So
and
it's
it,
a little
and it
short.
comes from anything where I got to come out of pocket, then you're not allowed to get my money. Now, if you are going to be able to use my money, then that cost should go to you.
That's my point.
It should go to you.
My point is that
choosing.
there is a cycle of investment that is out there that is generated through the banking system, which we need to have.
Yeah.
But it's got to be a system that is reliable enough that when the actual investor, which is the bank, who is putting the money out there and is gambling with everybody's money, if they get it wrong, right? It's okay if your shareholders, right? If it's a publicly traded entity, if you go back to your shareholders and you say, guys, you put money into this entity, the profit that we were going to make is not there. We made about, you can fire people, you can let them go, you can restructure, the bonus, whatever somebody was entitled to get. But when you talking about the average person that are walking in with their money to the bank and the business, I don't care if your business is $10 million or $600 million, right?
Yeah.
If you're doing everything right to run your business and there are people depending on you. All I was thinking about on Sunday night when they said FDIC is taking over on Friday, when they're saying, what are they going to do with that?
Yeah.
Then I'm looking into maybe this is a bank that only has small clients, and when they started to show this company is $3 billion. Airbnb is with them. Spotify is with them. Like you went down to like 6 to 7 different companies that are
Etsy, Roku, Circle, yep.
talking about 495, $97 million, and so if they're running their business the way they're supposed to, somebody should
You know how many moms make
assume
money
the
on
cost.
Etsy? Because they make cutesy little things, like,
So,
and they have
question,
to pay
question.
that out.
Now I know
Like,
about the company. I'm like,
yeah.
sounds familiar.
It's like I said,
The other day
Etsy,
somebody
it's like-
explained that to me, that like what do they do and how
Yeah,
does
they
it work?
put it. It's like a
Etsy's
cute
cool.
little
Okay.
website.
But
and-
Etsy's cool.
Yeah. So here's the question though.
Yeah.
Let's say even if the bank says, okay, no problem, I don't mind taking that extra cost, would it still prevent this from happening?
Yes, in the following way. The intervention that FDIC is doing right now, Federal Reserve, Treasury, all the bank regulators, instead of going through that process, right? What it actually does, it gives the ability to have another set of hands, whoever the insurance entity happens to be. Like they got to introduce their own way of auditing these entities. The way we're doing it right now.
Gotcha.
It's
So-
it's like this is something that everybody should know. Probably knew. Not guys.
Somebody
This doesn't happen. The moment that we started raising interest,
Yeah.
the moment that the interest rate started to go up, you had to have a measurement tool
Yeah.
to go into what does it do to the housing market.
Yeah.
Well, we went through this, right? But less people are going to be buying because they don't have the ability to qualify. What's going to happen to the auto industry? You know how many cars are being repoed right now? You know how many cars are being repoed right now because the amount of easy money that was out there to buy these cars right now is not circulating anymore, and people are not able to keep
Yeah,
up with those
yeah.
payments. Yeah, and so. Where is that measuring tool?
So I
that
have a
is-
question about that because
Go
they said Dodd-Frank.
Yes.
They said Biden in his speech, he said, well, Obama under his administration, he instituted Dodd-Frank, which introduced a lot of layers of security or whatever regulation for these things. And then they say that Trump came out and he eliminated a lot of those regulations.
Suspended
And so,
Dodd-Franks.
okay, suspended it. Okay, so
The laws are still in the books.
the laws are in the
By the
book that he
way,
passed.
by the way, it's super important that I tell you, it's not that it was removed, it was taken off the books because that's a law that became a law through Congress, who's the only one that is able to enable
Laws.
new laws, right? And so Dodd-Franks, by the way, just to give you a little bit of feedback on that, these are two individuals, Republican and Democrat, who probably, especially in the case of Frank, if you go back through the process of people, the politicians that were pressuring private banks to lend money to minorities, to make money easy to borrow, so that the so-called, oppressed and unprivileged poor us, right? Remember that we fall into that group, right?
Yeah.
From the black to the Latinos, and the whole idea was, to the extent that in some cases, we know for a fact today, that some banks were not being granted a license to open branches in certain areas, because unless they will agree to lend X amount of dollars for housing acquisition.
And that's how the creative lending happened.
So a lot of the creating lending that took place was forced through by the same people that later on introduced the regulations so that the banks can be better managed. You mean the
Them
same
if you
people?
do and them if you don't.
Exactly, the same people they were for you saying, "How dare you did what I asked you to do," right?
So-
so the rules come
Okay,
in. Trump doesn't rule. There's no.
By the way, this was Congress passed it because it was bipartisan. Yeah, when they said we're
All
going
right,
to put a pause on it.
so you are the new administration. It's so hypocritical for Joe Biden to get in front of everybody and say, "Well, Trump removed it." Well, you have every right to day one. It's coming back on the books.
Yeah, that's true.
It's coming back on the
'Cause
books.
it's not-
So to pass it on to
didn't
the other
start a day
guy
ago.
saying,
It's been 2 years.
exactly. So,
So-
regardless of the participation of everybody, they agreed to it. By the way, they agreed to it in a bipartisan.
Very bipartisan.
Right,
It
for
was
one
like
simple reason.
269, 150.
Here's the problem with that, Frank. The real issue with that, Frank. I have no issues with regulations. I think that some level of regulations. Again, we're looking for what is the better way to measure these things. Here's it's super important. Don't write it down so
My
you don't forget.
question, I have a question.
Yeah. Here's super important that you know this. The real problem with that, Frank, is that it was capable to criminalize a loan. That's a real problem. Listen.
Criminalize the loan. What do you mean?
I am the mortgage broker.
Uh-huh.
I read 3,000 disclosures to you. There is a camera of this that's recording this whole thing. I got two witnesses. I got people that are actually going to sign off on that paperwork saying that they were witnesses to what I'm doing right now. And I'm explaining, I'm recording. Do you understand, Lorena, what I'm telling you? Yeah. Good.
Give me the house.
Then you don't stop. You stop paying the whole thing. You can literally still go back after the recording, after the disclosure,
understand.
after the witnesses, and go, I didn't understand.
They didn't explain that properly.
So now you have the ability to refer that to the FBI. So now
And you're the mortgage broker.
you need a mortgage broker. Now you're being
Jail.
forget about losing my license. I'm losing my freedom. You know what I mean? Like
Yeah.
so that was one of the real biggest issues with that Frank.
Got it.
Do we need some level of regulation? Absolutely.
So-
That's good.
So my question is, because will any of the laws that were part of Dodd-Frank, had they still been in place, would have prevented what happened?
Not without FDIC adequately being raised to.
So why is this guy? Well, it's
Again, so
because
what?
that's my thing.
but
It's like,
again,
okay, so they roll back up regulations. Okay, awesome. Is it gonna
Alright.
like? Would it have? If it would have been in place, would it have made a difference?
I think-
the answer is no.
But let's go back to the source of what really aggravated
Yeah.
this whole situation. Right? Let's go back to the fact that there was easy money. Again, part of the problem.
Mm-hmm.
We know that was part of the problem. Easy money. There's another problem. We're gonna put another $800 billion into that one. We're not able to pay our bills because we're coming to a budget deadline again, and
Yeah.
the country's gonna be defaulted. All right, let's sign up on another $3 trillion. But what happened with COVID? How much money did we put into it? We just threw out there so that people will keep doing whatever the hell it is that they were doing, with no real. So that alone, all that easy money, they kept saying, well, this next crisis is not allowing us to start raising interest. So when they decided to go through that process, it was not. If you apply the same amount of years that you kept interest rate low, and you use the same amount of time to slowly start raising interest rates, you wouldn't have the type of impact that's taking place right now. But it's done for one single purpose. Make no mistake about it. They gotta force you to stop borrowing money so that we stop investments, so that you reduce the amount of debt that you
So you
have,
increase
so that you can
unemployment.
literally fire some people because we got, again, what they're saying is there's too much happiness and we have to stop the
gotta be on the
party.
other side.
That's what they did. So that Franks does absolutely nothing to regulate the feds. Who's regulating the guy who's raising the interest rate right now? Was that Franks? It has nothing to do with it. And because it doesn't address who controls the rhythm of the economy.
So do you think that Powell went too
Too
happy
fast.
with
So
his
absolutely,
thing?
absolutely, absolutely. I think that they're gonna have to assume responsibility for a lot of the losses. And I don't care what anybody says. This is a bailout. You know what I mean? Now
Yeah.
we already down to we already have 4 banks. 2 of them already announced in the list of bank failures. SBP and I believe Signature already made it into that list.
Yeah.
Of First Republic is just between today and tomorrow.
It's gonna happen.
So, all right. So when do you stop? You're ready. To your point, right?
Yeah.
You already said we got everybody. Don't worry about it. We got you. You know how great it is for the politicians to
It's
show
like
up in the
moving
morning.
back to mom and dad.
No, listen.
Excuse me. Where's the money coming from? Don't worry about it. It's
We
not
got
gonna
it.
cost a taxpayer anybody. Where's the money coming from? It's money. We're moving monies around. It's gonna be. It's gonna be there. It's gonna show up. But it's not costing anybody a penny. It's nothing. We got you, and we're gonna protect everybody. You know how great
It
that
sounds good. It
Except
sounds
for the
good.
fact that you can only do that X amount of times
Maybe
before the
twice.
whole thing collapses, because now there is no accountability. There really is
Correct.
no incentive right now, if I'm a
And
bank,
you can see it.
to behave better.
And
Yeah.
you can see it.
Yeah.
Well,
By the way, no, you can see it. Like I was expecting this morning. I'm like, holy cow, the stock market is gonna be a bloodbath. Not really.
yeah, but here's the argument though.
The banking.
The argument also goes back to what happened with Lehman Brothers. Everybody really, by the time that bank collapsed, everybody said that allowing the bank to collapse was a mistake. The problem is we are so concerned about coming across as the fact that we are running a financial system under a true capitalistic approach, which is no longer
Not at all.
anymore. And we don't want to come across as if we are making a China type of move, right? Where now the state comes in and takes over the bank. And so here's
Oh,
my
that's
my
really
happy
bad.
medium
You don't wanna do
solution,
that.
right? Unfortunately, I will never run for any kind of politics. So unfortunately, I can't take this conversation to Congress. But here's the solution.
Yeah.
This was a simple solution then, and it is a simple solution now. You don't just pour money into the bank. You do acquire the bank, right?
Who?
I'm talking about the state. Actually doing it, don't get nervous.
No, yeah, I do.
It's going Chinese style. Why do you do that, right? All right, so let me explain it to you from a different perspective, because and I'm gonna go back to that, right? So the housing market, the mortgage when I purchased, it's $500,000. The market dropped to $200,000,
Okay.
right? I'm also losing my job to top it off. I can't pay the $500, and I'm really discouraged to know that my property now is only worth $200,000. I want to walk away from this whole thing. Everybody, at some point, some of the lenders try to introduce something that is called a short refi, right? Meaning there was a lender that was going to be willing to say, we're going to give you the money to pay that guy for the full $500,000, right? And you're going to owe us the 200 that the property is worth. You keep the property like that, you're gonna be like, yeah, you crazy, I'm in, right? Except for the fact that there was too many hands on the pie, meaning there was too many people. That loan was already out there on the investment market. There was insurance involved. So that was not a reality. The only way that you were able to help that mortgage is by transferring from one set of hands, meaning whatever that price of the property couldn't be done through a short refi, have to be done through a short sell, meaning it was going to be through the acquisition of the property, a new buy. Now you got to come in and take her property, right?
Yeah.
And buy it at $200,000 because that is the market price of the property, right? So you're buying it for the right price. You're getting a new loan that's going to replace that. So now the other bank had to eat the difference.
Gotcha.
My point was, you were able to capitalize multiple entities.
Yeah.
And here's where it goes private again. Here's where, because it's not to keep it on the hands of the state. It's that a loan is measured through performance. They measure 6 months of performance, 12 months of performance, 24 months. You have some good paper to sell. Like if I'm an investor out there, I'm looking for, today credit is not just a number. It's a payment history. And that's when you're buying paper, when you're buying an asset, you buying the performance of the asset,
the
right?
payment history.
Exactly. So now that I sold it, so instead of selling it to him, stay with me for a second. Instead of selling it to him, I'm gonna just do a short refi with you, right? But I'm paying the other lender. That's the state came in. By the way, whether you understand it or not, that's exactly what they're doing. The state is coming in and is pouring in the money, but there's no real administration of the process, which is the reason why this thing sometimes, instead of making things better, they make it worse. There's no real admin of the process. So now you come in, right? Now you come in and you're gonna short refi, means we're paying the other lender the full $500,000.
So my mom is gonna pay off Alexi for my car.
Correct.
I get to keep my car.
Correct.
Now I pay my mom.
Correct. Now you're you're staying with the same lender. This is whoever your lender was, if you, whether it's the same lender or even if you went to, in this case, to another lender. Don't use your mom, because now you're gonna get everybody confused.
Government. I'm talking about. Okay, so government. I just wanna.
Your current loan is with Bank of America.
Got it.
Right?
Yes.
Chase is gonna take that over.
Yes.
For the full $500,000 that you owe. They're gonna pay Bank of America $500,000. But your new payment is gonna be based on $200,000 to Chase. To Chase, right? They're upside down.
Where did $300,000?
That's what that money that they pouring into is supposed to do. What it's supposed to do is, you're not gonna eat the losses, right?
Chase is not.
Correct. And you, who were potentially about to have a loss, you also won't eat the losses, right? So but what's gonna happen is, now that you have the right price, the right dollar amount, we're gonna measure your performance. We're gonna measure your performance, right? And once this paper is performing 12 months, 24 months, we can sell it back to the open market again. Maybe even Bank of America wants to take you back again. This was supposed to happen that was the premise. There was gonna be an entity that the sole purpose was gonna be, so the state do have the power to come in, introduce a single solution, minimize the losses for the entity that have nothing to do with the losses, right? Making sure that you have the ability to perform again. In this case, it's completely different. This is businesses that are performing and there are
they're
doing what they're
great,
supposed to do. The fact that the market is willing to say the mistake of the father is going to now transfer to the son. It's even worse than that. This guy was not even my father to begin with, right? I know you're talking about mothers and fathers. My point to you is was not the behavior. See, the last time it was the behavior of the borrower that owned the mortgage from the property that was upside down. They got discouraged. They didn't like it. This is not the case.
Yeah,
you have a
it's different.
solid business that's doing business and saying now, how the hell do I do payroll? So we have a system right now that is so fragile.
Yeah.
And just to pour money into it is also not the solution because, by the way, we don't have enough money to. How many banks is 30?
30, no, 40.
Let me tell you.
35 banks.
No. Over 100. Over 100 is 35.
Yeah.
Over 35 banks, over $100 billion.
Yeah.
Right? If everybody goes under on that, I'm moving to Haiti. Just saying that's it. I'm taking my stuff. I'm going out there because there will be stuff
Nobody
being
else.
burned in the street because we don't have the capability to do that.
let's we
We're
know
running back to
not all
Mexico.
35 is going to go
Crossing
under.
the border,
But
I think
how many would you say would have to go under to where you'll be really concerned? 'Cause
I-
I don't think it's going to be all of them.
I think
but
that we are already.
It's already been 2.
And I think, but
already been two.
we basically
Two
looking at
yeah.
4 right now. There are
Yeah.
potentially really risky. 2 already under. You can potentially see 2 more.
So is it
And
once you hit 10?
I don't think that we can handle much more than that. Maybe 2, 3 more.
So that's a.
By the
that's a
way,
small number.
but here's the difference,
Yeah.
guys. The
Yeah.
difference is because.
Take melatonin to go to sleep tonight. What the
That's why I didn't want to have this conversation because most people. But here's the difference. Here's the only one thing that I want to tell you. You know, thank God. You know, I mean, most of these banks are, you know, they not in a niche market like these banks were. You know, what I
Right.
mean, these
That's
guys
the problem.
are in
that
a.
they were specialized.
So they add in an additional layer of risk. You know what I mean? And everybody was very critical of the CEO of this bank, who's saying, "What are you
The same
doing?
thing happened with
You're
Muamo.
sitting in all this money." Exactly. You know what I
Yep.
mean? And so. And so a lot of and some of these entities just got to go through acquisitions, and that's the beauty of it. That you're gonna have other banks that are gonna say, "Trust me." Right now, Bank of America is looking into the same play that they ran with Countrywide. They're looking into, all right, so who's a good bank out there that we should be thinking about buying right now? Chase is thinking. Chase, by the way, you mentioned WAMO. Chase ended up buying Washington Mutual,
Yeah.
right? And
Yeah.
so again, whoever has a lot of money, a lot of liquidity, they're gonna go shopping aggressively.
Yeah.
So, but that should have, that's my whole point.
Mm-hmm.
My whole point is that, like, I want to make sure that it's where I have an issue with.
Can the
is
market
saying,
by itself make the correction? That's
yes,
what you're asking.
Yes.
Not without putting again in this case for me
A lot of pressure on the depositor.
The housing market was so easy to fix that I just couldn't believe how many wrong choices were being made. It was almost like everybody say, "Hey, the solution is if we go to the right," and everybody just went left,
go
like
left.
the opposite.
Let's go,
Let's go. It was like one of those. Like I remember saying to a friend of mine, I was like, "Listen, I am gonna need to feel like I need to take some crazy pills. I don't understand. This is really not complicated to solve it. This is different though." You know, and that's why I hate when everybody wants to say, "Well, this crisis is like that." No, this crisis
It's different.
is like this crisis.
crisis, yeah.
Stop comparing one next to the other because there's so many different components. I understand what you're saying in terms of if the people that are running this thing got fired, and that guy probably
He did. He did this one.
sends a letter to Martha Stewart saying, "If it happens to me, what do I need to do? What do I bring to do? What kind of toothbrush can I?" That guy, like, there's a few people here that I don't care if they they get to a point where they take everything from them because these
Yeah.
are people that really make some careless choices. That, by the way, there was a lot of people already talking to them about pay attention to this.
Stop
What
doing
about
it.
that? How about you diversify? Didn't pay attention. Didn't make an adjustment fast enough. So I'm not concerned about those guys.
Biz-stock.
But the business that was connected to that idea that went to bed. Imagine if you're running payroll to that entity,
yeah, I couldn't-
and you freaking
I
going to
run
bed
payroll, I
saying,
can't imagine
"How do
that."
we
Yeah.
how do we pay those people?"
Yeah.
So the real problem right now was not the bank going out of business. The businesses that were banking through that bank
Correct. They're
going
gonna-
out of business,
Correct.
Yes.
right? And so that requires an aggressive intervention that no other bank is. So why would I come and put all my money at risk to save something that you did in a very stupid way just to tell somebody? don't
Because
do
it's
that?
an investment on the business. Like, how many banks don't want to have, like, these companies do business with them?
Except for the fact that you are not that company anymore. You were worth $400 million. Now you're worth
Yeah,
$250,000.
and not only that, I'm
Do
thinking
you understand? If
I get
FDIC
you.
was the only tool,
Yeah.
and you were that guy that was worth $400 million, now you want to come to my bank. What are you bringing to my bank? $250,000.
But isn't it like? And tell me from
You're not worth $400 million anymore.
It's a business.
I got it.
It takes in.
But here's what I'm thinking, and tell me if I'm right or wrong. Because when you think, so what was one of the companies you said?
Spotify, Airbnb.
They can't buy Spotify. Is Spotify, even if they bank with that bank, they're not buying Spotify.
No, of course.
So then here's what they do have to buy is what is it that bank is investing in? And if that bank is investing in something that's already going bad, then Spotify's just messed up. So I get it. I would want to have Spotify, but I can't help you, Spotify, because
And by the
right
way,
now
that
you're
would
connected
that
to
would be a great investment, right? If
these
I'm the
rotten
bank,
apples.
if you're saying, I'm gonna buy you, right?
Yeah.
Because I'm buying the assets that I like to buy,
Mm-hmm.
opposed to yes, there's $200 billion in assets.
Which is what?
But if everything is a startup company,
Which is all
more
dark,
than
yeah.
likely it's a very high risk.
Mhm.
There's no way you're gonna have somebody like Warren Buffett saying,
Mm-hmm.
"Yeah, let me
Let me
put
jump
$200
into
billion
that. I get
into
that.
that one,"
Yeah.
right? Because they're not buying that company. What they were supposed to get, like if I'm coming after your company. And by the way, I have to, in New York, I had a business where banks will walk into my place and say, "What do we have to do to do so you can bring your
So you-
business to us?" But I was bringing the full amount of money that I had in one bank, that they knew what the cash flow was, how much money was going to be sitting at all times in those accounts. By the way, that's what they want. They're not concerned about your checking account. They want to know if every microsecond that they have available, how much money they can put out there and do something with that money. What is the balance that you keep in your account so that becomes investable? Again, they are over leveraging the money that was brought into them by somebody else that never, like you said, never intended to say, put my money at risk and not participate. By the way, I'm not getting any of the profits.
Yeah.
Not only am I not getting any of the profits, you're charging me fees to take my money
Yep.
and go invest it in a very reckless way.
So-
Yeah.
So the good news is that the only people that are being bailed out is the depositors,
Correct.
not the
Up to
investors.
this moment.
The
Yeah.
bad news
Correct,
is
correct.
the bad news is that it is still a bailout. So understanding that, and I want to also like put a couple points out there about how does this affect the everyday person, and what can we do. So, but in this case specifically, that's the good news. Only the depositor. The bad news is that there's still a bailout. Is there any other way to go about it, but other than getting the Fed involved and the
I think that we
yellings
have
of the
to.
world
We have to.
Biden saying what he said and.
Yeah, no, I mean, again, that was the most. It's such a hypocritical thing to come out and say it, and really, again, they desperately
But
trying
you have run the play
to
differently.
blame
What else could they have
event.
done?
Well, if they really believe on the things that they say that they believe, listen, there was a set of rules in immigration. They have the ability to make some changes from day one. They, as a matter of fact, not only are they going back to the same set of rules that were in existence by the Trump administration,
They made it worse.
they're going to make them worse,
Yeah.
right?
They're
More
reacting.
aggressive. Banking industry right now to come out and to say, well, we have this, set it up. You know what I mean? Obama and I, we did that. and then Dodd-Frank's, and he removed that, took it off the table. But wait a minute, you've been here for 2 years. You could have, if you were really paying attention. The problem is that we assume that these guys are really competent enough, capable enough, and that they are paying attention. And Lorena, I promise you that these guys, most of the times, they're just reacting to stuff that they were truly not paying attention. How the economy works is a lot more complex than most people actually. You don't get, like, you couldn't sleep at night if you knew how vulnerable we are in so many different areas, so many different places. So how do you run? Here's my recommendation to the average person that's watching us right now, right? Right? You're looking into, there's a couple of things that are really, really, some people are taking a beating in different areas. So forget about these guys that are saying, holy cow, is my money at risk? If I'm in small business right now, and I'm talking about $500,000, $1 million, $2 million, $10 million, and I'm saying, what happens if something like that happens with my bank? So the first thing is that,
do I need 10 different banks?
To be quite honest with you, this is the right moment. This is where CEOs have to pay a price for their behavior and how they put themselves out there. Because this is the moment when my recommendation to everybody is just look into the real strength and stability of this bank, the history and the track record of CEOs. And maybe this is a good time for you to consider saying, maybe I need to move my money from this guy that was down to 30, 40, right? All the way up to who's top 2, who's top 3. Yeah, but doesn't that just make the bigger? Yes, but in a moment like this, what you're looking is for the highest level of stability, because this panic though, what created a bigger mess here was the level of panic that is continued to be raised. It's not over yet, right?
Yep.
So for the average person though, there is $10,000 in a bank, $20,000, $50,000. Your money right now is insured. You know what I mean? You have no reason to start lining up around the corner of the bank saying, I need to take my cash out. There's no need to introduce that level of panic. Right now, even though unfortunately most of these entities, including the government, has the bad habit of reacting to this situation, as opposed to proactively going out there and addressing some of these issues, make no mistake about it. Some solutions are going to come out, maybe a little bit of a Band-Aid type of scenario, not a strong solution, but some solutions are going to come out. So everybody just got to sit tight a little bit. Again, I'm talking about the average person. If you're a business, though, you have a few $1 million in play out there, you do have to pay attention to what it is that's taking place with your money. So pay attention to the news. Do the best that you can to try to get from some different opinions. If anybody is recommending, maybe
whatever you do, don't pay attention to Jim Cramer.
Oh my God, this guy is, what is it?
Inversum.
60-70% of he was just a couple of weeks ago.
He was in February. He said, "Go all into SVB. It's undervalued."
Why is this guy
It's still on TV, I don't understand.
there? He was burning cash during 2008, 2009. He's burning cash again. Like whatever recommendation he gives, I go the opposite direction. Your money will be safe.
You'll be making all the money.
But that guy should be taken off the air. There's no reason, like seriously, there's no reason for this guy to continue to be there. In addition to that, guys, my recommendation more than anything else, I don't want to be part of the group of people that likes to introduce panic into the situation. Right? We need to see, what is my risk level. At this very moment. And again, if you're under $250,000 sitting in the bank, you really don't have much to be concerned about. You know what I mean? Should we be raising FDIC? Yes. And we should raise it under 2 different criteria. One of them is for the individual,
and the other one's for
right? And the other one is for the small business. And I do believe that 100% of a business should be insured, not just a small percentage. If there is a cost to that, should go to the bank.
Absolutely.
Not to the small business. I don't see a single reason why you're gonna go gamble with my money and I have to be the one taking the risk. And in order to protect that risk, I gotta pay for it when you are the one gambling with my money. That to me is an unacceptable flaw of the system.
They give you a crazy interest rate because you're lending them the money.
Still, you know what I mean? Listen, you can be paying me right now 20% on my money. But if 100% of it is at risk, Yeah. That doesn't make any sense, you know what I
Right.
mean? So, and that's what we're looking at. But with that being said, I hope this was absolutely helpful to everybody. There's a couple of things, there's a couple of additional things that we want to announce, but guys, this is going to be evolving. Just think about what happened from Wednesday to today, right? What happened from Friday to
By the way,
today?
it's Monday.
From yesterday to
Yeah.
today. This is
It's
barely Monday,
the 13th.
Yep.
the 13th, you know what I mean? And so what's going to happen from now until Friday, only God knows. We're hoping for the best. I know that you are. Again, please do not panic, right? Just get information, go to people that you trust, have some good conversations with them. If you have any questions, feel free to send it to us. We're not giving you advice. We just want to give you some different choices or perspectives that you can go to. This is the time where we highly recommend for you to visit our good friend Patrick David of Valuetainment.
Yep.
That would be a great source of fair and balanced information, different sources, you know what I mean, just about, phenomenal recommendations you're going to get there. So if you have the patience to sit through us, I'm sure you're going to have no issues being connected to that guy, right? And so with that being said, guys, just a couple of things that I wanted to mention to you. I don't know if you know this, through the El Paso, Texas, that borderline in that area, over 1,000 people rushed the gates of immigration.
Rushed
I
it.
want you to think about that for a second, right? This is not, we're just talking about our border patrol, which is first line of defense. Our structure, the system, was literally like ran over. And people just push through the structure. And of course, what do? You start shooting people? That would be news on top of this news. Like, what is the right thing to do when people just decide we don't care? It's full
There's 1,000 of
anarchy.
you.
It's full
I mean, unless
anarchy.
there's 20 of you. Let's
You know
go.
what I mean? Full anarchy. We're just gonna run through that. But
right.
there's so many people right now that are sitting at the border that if they all decided to do that,
Yeah.
through any of that, whether it's Matamoros, El Paso, Arizona, you name any of this, okay, whatever area they absolutely want to go through, you couldn't stop it.
Yeah, you can.
You couldn't stop it because we actually, right now, at this moment, we don't have the manpower, we don't have the capability. It's extremely unfortunate what's taking place. I think about 90% of the people that were crossing, most of them are actually coming from Venezuela right now, which tells you again how desperate the situation happens to be, but also tells you that given what they're going through back home, you know what I mean, this is just another thing that they would probably will have no choice. You got to break through certain things just to find something to eat. And so you get to the border, you're not letting me in, I'm going to find a way in.
Yeah.
And by the way, if 1,000 of us run at the same time, how do you stop
And there's
that?
100 of us. Yeah.
Yeah.
So just highlighting this because I don't know how any other way we can literally say it. It's not getting better, it's getting worse. So if I'm sitting somewhere in another country, the only thing that I'm thinking about is, okay, I just got to get there, make sure there's a lot of people, and all of us collectively, we can make another run. So these are the things that they don't make it, they don't slow them, this type of immigration down. They make it more enticing for people to come. And
By the way, this is not being covered on.
almost nowhere.
Yeah, I tried
Almost.
looking for some of this information, and it was very difficult to
Yeah.
find. It was
Yeah. So
very few
so
publications.
again, whoever is controlling media and media communications right now,
They don't want you
this
to-
is not something
Yeah.
that they want people to talk about. But again, it just makes it even more complicated. The final thing that I wanted to highlight, guys, just so we can wrap this up. Madison Square Garden is at risk of losing their liquor license. So if you're used to going to the game and you're buying a couple of beers to enjoy the
No
game right
beer
now,
while
They
you're
try to
watching the
give
game?
all the money to Brooklyn. That's what they're doing.
now, do you have any idea why this is actually happening?
I don't know.
So you're familiar with the facial recognition systems that a lot of entities, by the way, we use at the airports, we use in the state of New York filed a lawsuit against them, and not necessarily going anywhere, right? Because they do use that facial recognition system because it's a security threat. You're putting 30,000 people into a single building. You gotta better have some measurements to say, don't worry about it. We're gonna try to minimize the risk of there's a few crazies out there. We have a database that we can compare it to, and they're not gonna come in. That I
Feel safer.
attending that game, I should feel safer. But there is the state of New York being upside down, no different than when it comes to the people that are running the state, running it to the ground, which is unfortunate to witness and unfortunate to see. You know, they filed a lawsuit and realizing that they're not going anywhere with the lawsuit, so they went and decided to target their liquor license. This is like a real mafia style. I'm back in New York. Oh, you're not gonna do what we're telling you to do?
No more.
Here's
We're gonna break your
We're
legs.
telling you to break your legs. So that's literally what it
Holy
means.
cow.
I'm breaking your legs.
You see, but that's what I'm concerned about
I
over
don't think
here
that's
at
a
the
smart
top.
move, though.
When you're talking about government intervention and
Right.
things like that, I'm 100% to you that in terms of. But
You see,
we are.
just on a local level.
Where is it gonna go? Is it progressing? Is it can anybody even? By the way, nobody. I'm gonna be honest with you. At the very beginning, I was not comfortable with the technology, right? Because then you go back to okay, so who gets a handle of this? You know, think about even your cell phones right now. One of the security features of your cell phone
The facial
is
recognition.
facial recognition, right? And so you realize that it's actually eye recognition. Right, because I can put my face in front of it and my eyes are closed. You know,
And it won't,
you know what I mean? It's not doing anything, right? So the level of technology here it's a little more sophisticated, and so there's always the whole idea that it could be used improperly, you know. But you're not getting your way around, and your best choice is to target an iconic
somebody else's
iconic business by threatening
that's
we're
not
gonna put you out of business. Like that's the moment we start questioning like wait where am I here? Like is this did I
By the way, forgive me if I'm wrong, but there's multiple entities that are being affected by this. It's not just Madison Square
Correct.
Garden.
Yeah,
Correct.
The New York Knicks. I think the hockey
Well-
team plays there too.
No, but I'm talking about different venues as well.
venues, providers,
Yeah.
companies?
If you
By the way,
own the
how
liquor
many
store in
people
the
no
building.
if you're Budweiser if you're Budweiser right now
30,000
by the way
people not drinking
how
beer?
many people do I need to fire the moment that I know that place doesn't have a license? So who gets affected?
Yeah, a lot of people.
Everybody.
You know what I mean? The
That's
little
not
guy
smart.
always
I
gets
don't think that's
affected.
smart. It doesn't make
Bad
any
business,
sense.
not a
Yeah.
good idea. I hope these guys come up with a better solution.
Bigger government
Then
is not
it's,
the answer.
it's shameful that they decided to go like gangster style,
Yeah.
you know, and then they want to call everybody else. It's talking about abusing power. That's
Yeah.
literally what it is. It's definitely an abuse of power. But with that being said, guys, any final comments about any of this? today?
Biggest thing, we just got to pay attention. There's a lot of information, coming out, and it's unfortunate that even with all the information coming out, there's still a lot of people who have no clue what's going on. So pay attention to what's going on. Look into different things that you can do to make sure that you, with your personal finances in the best position. Which there's obviously a number of things that they can do. But that's what I would be thinking about. Just be in the know. Don't be oblivious to everything going on, and you're not concerned. Yep.
Yeah.
Make more money. Find a way to upgrade your skills. Even though with whatever it is that is happening, save your money. Make sure that you're liquid as much as you can. If it's over 250,000, go to different entities and make sure that they're solid. That's my recommendation is make sure that you're right now saving your money because a lot of things are about to go on sale and you have an opportunity to create wealth for yourself.
The interesting thing, guys, is that moments like this actually
They
create
suck, but
a
they-
lot of opportunity for a lot of people.
Yeah,
you know what
you
I
can
mean?
make a lot of money.
Here you're gonna have somebody that's gonna become a new business owner. Here you're gonna have somebody that's gonna be able to acquire something that
Buy Etsy for
was
like
failing,
$1.
so you can buy. Well, no, that's not gonna happen. You can buy the paper that bank owns for a discounted.
I'm telling you, Etsy's gonna be fine.
By the way, just so you know, that happened during that mortgage crisis where you were able to buy mortgages. That's exactly what I was describing when I was saying Bank of America buying the assets of they were buying non-performing paper. You know what I mean? And so you can literally, even as an individual, I remember somebody saying, well, I think that you have to buy like $10 million. Right? And then it went down to you were able to buy $1 million of assets. You know what I mean? But you're buying things that are performing and things that are not performing,
So
right?
you're not really sure.
So you don't know what you're getting there, right? But I promise you that $1 million was going to give you, 20 plus million. It's just that you had to work that investment, and then it went down to even $400,000. But listen, hindsight is 20/20, and unfortunately, a lot of people, people that were able to understand what was taking place with the market jumped in, made it happen. In this case, there's gonna be some paper for sale.
Yeah, absolutely.
But I don't know exactly
Watch Kramer.
what startups
Yeah.
you want to buy, because those are the guys that have loans that I don't know how secure they are. I don't know how great a personal guarantee is these days when all I got to do is also file for bankruptcy. You know what I mean? So, listen, with that being said, I agree with these guys. Pay attention to what's going on. Make sure you're following some of the news. Don't panic. It's my, if you have a little bit of money, it's a good idea to start thinking about, if I have to invest into something, why should I be investing? Is there any company out there that's going to become available? I think there's going to be a lot of great opportunities. Protect yourself, protect your family, protect your wallet, and I 1,000% agree with you. Go find a way to see if you can make some more money.
There you go.
Nobody's going to get angry. You're going to feel better. And I want to say thank you to, all jokes aside, to Mr. Warren Buffett. This is one of those guys also. Warren, it's impossible to quantize, the positive impact of your wisdom. You know what I mean? There's, we know that you're not God and you're not playing God and you haven't been right 100% of the times. You know what I mean? There's been some mistakes, but in the overall, your investment strategies and recommendations and your approach to this side of the game has been always extremely solid. You know what I mean? So I'm inviting everybody to watch. There's a ton of videos out there from his stuff that I think is worth paying attention
and a very thick book.
Yeah, and definitely, if you want to find it. With that being said, if any of this was helpful to you, what do we want it to do?
Comment, share, subscribe.
There you go.
Comment.
Yes, make sure you comment. Yes.
Any questions?
Whether
Move
you
it
agree,
around.
disagree, let us know.
Absolutely.
Yep.
We thank you for being part of this conversation, and hopefully we can bring you a quick update as soon as possible. Thank you, guys. Take it easy.
Entonces.